Hey everyone, Douglas here, and welcome back to the MMT Macro live stream. We're
Thank
back
you. Thank you.
after a week hiatus. Bijou, welcome back, my man.
Oh, you didn't do one last week without me?
No,
Oh,
I took the
sorry about
opportunity
that.
to just chill, study some things, look into
Good.
some things. So no, it took. I was gonna try and piece something together last minute. I was thinking maybe I could do like and maybe I will do this if I ever need to fill in kind of fill in a missed week. By the way, howdy chat, welcome.
Uh-huh.
Glad you guys are here
Yeah.
too.
Hi, everyone.
I had to disconnect and reconnect. So if you're in chat right before we went live, which is why I think the chat on the screen is showing that that I disconnected and successfully reconnected. So if you're in chat, say hi. Let us know you're here. I see a few people waiting for us to go live. All right, good. Howdy, Hamel. Thanks for saying hi. Thanks for being here. Chat works. It's showing up. Where was I? Yeah, what I was thinking about doing is maybe doing something where I use like ChatGPT and VS Code and Python and kind of maybe code something in real time or something like that. Kind of do a project in real time. I thought about doing that last week, but just couldn't come up with the idea. But yeah, no show last week, so it's been 2 weeks since we went live, and I think we've got some good stuff to talk about tonight. We'll see. I've got a few things I want to bring
Yeah.
up, but anyway,
Good.
Bijou, you and I haven't talked
Yeah.
much in the last 2 weeks either. We've been playing, I guess, a
Right.
modern version of phone tag where you message me and I'll make videos
Yeah.
explaining what we need, but we've been working on some
Yeah.
things that way. But yeah, what's new with you, man?
Sometimes it's a bit more efficient. I don't know. If you're just doing technical collaboration,
Yeah.
uh, and it's just like I just need this question answered. Let's not talk about the sports or the
Mm-hmm,
the
mm-hmm.
politics or anything. Yeah. Well, I had another trip. I had to go. I had my nephew's wedding. It was a Hindu wedding. Man, that was interesting.
Yeah.
He's he, he's like he was like looking like pale like a ghost from like 3 days, I think, of getting married.
Because
And
those are really those are. It's a, if I'm not mistaken, the Hindu marriages are very long.
yeah,
Correct?
yeah,
Yeah.
yeah. They were long. It was fun. It was really colorful. But I was only like at one evening of the whole 3 days.
Okay. Okay.
And he was looking a bit pale and I don't know, maybe anemic or something. And his wife is really dark skinned, so definitely ebony and ivory sort of
A
situation.
little bit of contrast there.
And yeah, I got I have these my eyes get really itchy with the male cat, not the female cat around
Okay.
here.
Okay.
And that whatever that is, it's only sort of recent years that I've got sort of had my eyes attacked like this from whatever allergens. But it happened to me at this wedding ceremony too. It was in Auckland. I didn't think there were any cats around there or
Cats
anything.
running around.
So I didn't have such a great time. And then when the DJ started hitting the music, it was so loud. It was a good opportunity to sort of get outside the venue and
I was
just
expecting
catch
you
up
to
with
say
catch up with relatives.
when the DJ started playing the music, that was your time to start throwing them back and get wild.
No, I'm very sort of conservative in that aspect of life. I never partied when I was a youth, and I was like I felt rebellious because I was the only one not partying and going to
Yeah.
being
The real,
drunk.
the real
Yeah,
countercultural
man.
kid. Yeah. Yeah.
But radical in my politics, but very conservative in that sort of narrow sort of socialization area of life or something. I don't know what it was. It wasn't like I wasn't surrounded by nerd culture or anything like that either. I mean, I didn't have any friends who were really. I had one friend who was a bit of a genius at math. He went to MIT and that, but apart from him, and he was a bit of a he was into drugs and things. So I was like, oh, I felt pretty weird growing up. Anyway, had a good chat with some of the relatives.
Nice.
Caught up with this family. There's a family. There's side of the family here is a bit out in the bush. They sort of live out in the what you could call New Zealand East Coast sort of outback. You never more than 20 minutes from the sea though. So it was like it's kind of strange in New Zealand. You can't really get in the true outback, but there's no such thing. Anyway, that was interesting, but it did sort of take away a bit of time, and so I spent the whole week sort of trying to catch up on other things, and yeah, hence the WhatsApp tag that we were playing
Back and forth. Yeah.
and like I haven't really done a lot of MMT apart from maybe some of the dashboard stuff.
Yeah.
In recent weeks it was just catching up on other things, and yeah, and students doing end of term sort of panic session.
Yeah.
Now that's all quiet. That's all quiet because they're on holiday now. So
nice.
I'll be free to do a bit of other stuff this week. Yeah.
Nice.
Anyway, how about you? How's getting internet cords ripped out by kids?
right before I go live, guys, and we'll be jumping into the once people start rolling in here. We'll be jumping into kind of the meat of the live stream. What I do want to talk, I'll go over. What I want to talk about CPI data came out today. We had jobs data come out, finishing off last week on Friday. We had FOMC minutes coming out today. We're seeing oil take off, quite a very vertical move. Those are the big things that I want to talk about market-wise once we get underway. But I like to wait just a few minutes for people to roll on in, but just to kind of tease what we're doing. But yeah, right before we go live, my kid comes in to see if I'm available, and on the way out, this is just how this is how my setup is at the house. The only hardwired cable connection that I have in my entire house is on the second level. I'm on the third level. So when we go live, to make sure I have a good connection, I run my cable, 100-foot Cat 5 cable or Cat 6 cable all the way across my house. And it looks like, 1920s, electric cord outside of the house. And my kid.
Outside of the house.
But in this case, it's throughout the house. My kid just ripped it out of the back of the machine as he was leaving my room. That was not fun.
Yeah. We've got Wi-Fi boosters all around here. I fought for like 20 years here to be the computer that had the Cat 5 cable.
Yes.
When I was in the States, I had the big long cable as well, and although back then I was sort of the only heavy internet user, but now it's all changed, and now I'm on the Wi-Fi booster. I had to relent because the cable, the latest upgrade to cable we had, it wouldn't go through the same socket. It was a different optic fiber connection or something like that. They had to go through into another room, and so yeah.
Yep. Well, I do have a connector right out. I do have a Wi-Fi booster right outside of my office door, and I do actually run the cable into it, but it's not across the house. But when it is across, anyway. Hamel, it did actually break. The connector did break. The little pin thing snapped out. So it's I just have it jammed in there. Anyway, hopefully it sticks for the remainder of the live stream, and he doesn't come.
But sugar from your kids' sticky hands on it.
Yeah. That's the trick. Actually, you just put a little bit of like super glue on it, let it dry, and there's just enough of a thing there. Yeah, it's not the first time I've had to fix fix that. Anyway, what else? Yeah. Let's see. I think we can start changing gears here. I got to step out of my chair real quick because my son came back in and left my door open. So I'm having another good start to the live stream. Give me 1 second here.
Go ahead, do that. Yeah, take care of the business there. Also, I've been on a bit of a news holiday chat. So if there's any news the chat wants to bring up, feel free. Maybe do that in like the second hour or so. Here we go. Man's back.
All right.
Oh, you're here. Yeah. All right. Good.
Door shut. The other good news too, and I know you guys are now going in the opposite direction, but the other good news too, it is like officially summertime in Michigan where I'm at. We've had 79 today. It's absolutely beautiful. We've had great weather. I mean, it's gonna be terrible next week, but
is it?
We're finally there, man. We finally made it. I know you.
Well, this is good. Well, this is maybe good or bad. I've got this experiment going with my brother. Okay, so he often dips into the self-help sort of industry stuff, or motivational stuff, and yeah, he runs his own business and so forth. But so he proposes this experiment to me, right? And it's like, have you heard of this guy Wim Hof?
Have I? Are you asking me?
Wim,
I don't think I ever
Wim
have. No,
Hof. Yeah,
no.
yeah. Oh, okay, so he's 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 some extreme athlete guy. His thing that he does is extreme cold. So he
Mm.
dives underneath ice sheets and just about died one time. But basically he gets through it usually okay. And so he's actually created this whole little industry for himself where he promotes these ice baths.
Yeah, yeah, yeah,
And
yeah,
in the
yeah.
bodybuilding,
Yep.
CrossFit, or
Yep.
extreme bodybuilding industry, they like to dip in the ice bath to
Yep.
reduce inflammation and that sort of thing.
Yep.
Supposedly got all these health benefits.
Yep.
So like my brother, he's like, oh yeah, he knows that I get a bit hot at nights, find it hard to sleep sometimes. My head is pounding. I don't know, with all the genius ideas that my head is
Oh
generating.
yeah.
The
Yeah.
heat,
I
the heat,
feel it. I feel the
waste
pain.
heat is
I know exactly
huge,
what you're talking about.
huge.
Yeah.
Yeah. We all suffer from this. so, and so he suggests I get this ice bath. And so I'm like, oh, okay, well, only if it's run as experiment, only if you sort of help fund it and all this anyway. So he gets me this ice making machine, but gets this ice delivered to my house. I've got this ice bath thing, and so I'm doing this, and I'm thinking, all this hassle I have to go to, and all Douglas has to do is go naked, walk out to his litter box, back again, and he's done it. That's right. That's that long story. So now you can't do your ice treatment that way, and if you want to, you'll have to get all the gear in your summertime. I'm moving into winter, so it's going to be like a double cold snap for me. Although I reckon, winter probably be easier. I don't know, right? So you already cooled down a bit. You can't really get ice water colder than 0 or around about 3 degrees because it's actually quite a lot of volume, and you've got ambient temperature. So yeah, it's interesting to see about that. Anyway, well, yeah, I just keep thinking, what would it be like over there in Michigan, with like sub-zero, and you can do the cold treatment just by standing outside for a little bit.
Yeah,
and get back in. Yeah, it's done. That'd be great.
That is how it works. We do get sub-zero quite often.
Anyway, I should have kept that for the fun half.
Third hour.
Sorry, didn't mean to derail
No,
soon.
We're starting. Yeah. The viewers are starting to turn up. So
sounds like there's a bit of quite a lot of macro stuff.
Yeah. I'm gonna change over to
one thing about digging into all the options trading and all the
fascinating
finance stuff.
Yeah,
that I sort of have to brush up against a little bit now is it's insane. It's like there's so much going on in that area. It just seems like there's so much pointless activity that investors have to chase. It's like a warfare, that the hedge fund people messing up the straight investor types, and then it goes around in a whole circle. It's a massive game, right, that people are playing, and it's like it's kind of a relief just to get back to MMT and just highly macro stuff.
It is. It can be discouraging, especially when you have when you just want to understand economics and you really just want what's best for society, and you really want and you really want markets to do what markets are supposed to do.
Yeah.
And then you see the finance world, which is just
under that hood.
It is.
You don't want to look. It's pretty scary looking under that.
It is. There are just a ton of finance grifters out there. I mean, there are people making just shit tons of money that offer no value, and this is one of the things we've talked about as well, Bijou. Is this idea where so much of kind of what you would call kind of econometrics, so much of just financial, where kind of math meets financial is really just statistical understanding, right? There's no prediction in it. There's no actual forecasting. It is so much just kind of gauging the statistical bounds of where price could go. And it seems like such a waste. It just seems like such a waste. I don't know. Sometimes I get very disillusioned with the very world I'm trying to sell products to.
Yeah, I know.
Products
a lot of black holes, dark arts, and it's like the whole thing. They create their own need.
Yes, that's the best way to put it.
Industry chase models and models that beat other models and models that beat models that beat models.
Yep.
And you got to wonder what's the even the free market purpose of this. Certainly not much public purpose in it, apart from the
Yeah, I agree. I agree.
Grabbing money off someone else who's not as good as you.
100%
at doing this particular thing, but it's not growing any food. It's not creating any sustainable energy. It's the opposite. So,
well, especially in today's market structure, right? I mean, if we're going to have a marketplace, right, where companies can be publicly traded, where you can own parts of companies, right? The reason you would want to do that is to capitalize companies for investment in real goods and services, right? I mean, that's the purpose of the free market, right? And you want people out there saying, hey, we should invest in Apple because they've got the new iPhone and that's going to be the latest and greatest. Or no, we should invest in Microsoft because they're ahead on the AI game. Or we should invest in Ford because they really are going to have the best electric cars or whatever, right? That is, and that is how it should, that is what the game should be.
That's what it should be.
So much of investment is just you put your money in a 401k, you put your money in some sort of deferred tax account, you put your money in here because this will be your nest egg when you get older. And there's no decision making process in that. I mean, other than you're just going to take 10% of my income and invest it, right? So I mean, I'm not the first one to recognize that the actively managed portion of everything is just gone out the window, and now everything's just passively managed. But there's no benefit to society at all, and it creates. Well, I mean, really, what it does is it creates a systemic risk in the system when
it does create risk, agility,
exactly.
capitalism, Randy Ray stuff.
Yeah.
I really keep meaning to read a bit more about that. It's interesting sort of history, or like modern history, contemporary history on the money manager capitalism and all that. But it's just so obvious. It's just so obvious. And so I just listened to maybe Randy Ray for a little bit, and it's like, that's what's happening. I was like,
I know it's like. Is it and Hamel, I think you've mentioned, is it Chris Cole or is it the other guy, Green, maybe his last name, where they've run models on this, where they've run models on like the long-term effects of passive investing, right? Where you're not having any active management. It's just flows purchasing the S&P that creates this kind of underlying fragility. And eventually you just get a point where you get to the point where the pricing mechanism of the market becomes the signal of the price becomes signalless. Nothing's being communicated by that price signal anymore. And that can create that can create its own kind of the guess is it's actually like an upward death spiral, right? Where price actually will fly higher. And before it kind of collapses, but anyway, I'll digress. But
what was that name you mentioned just before you move on?
There was Chris Cole, and he's one of them, and I think it's Mike Green is the other one. Who are the two that I'm aware of that have done a lot of research on that front, and it's something I want to dive into because one of the questions I have, which they mainly Mike Green. He's also very MMT adjacent. Yeah, I've seen some things where I agree with Mike Green, and I've seen some things where I don't think he's fully incorporated a full kind of heterodox MMT understanding. But thanks for that, Hamel. But I'd love to one of these days start building some Minsky models that kind of build in the ideas of passive investing into the S&P and see, or maybe it's agent-based models that you have to build to understand what the impact would be. But going back to the whole point of getting disillusioned with it and finance as a whole, I mean, it's just there's so much money being skimmed off the top by the finance sector, and they sell all of these what they would call financial tools that skim money off the top of the whole thing. And there's no benefit for society or a public purpose for it. Yeah, I mean that's always the frustrating part. But
and Hamel made a good point too, because the media get in on it too. They amplify a lot of stuff.
Yes,
and some of the traders, they might understand that the media don't have a clue.
Yeah,
right.
Yeah.
But they have to listen to the media because they know the media will shift markets as well, even though they don't have a clue. And so it's this massive psychological game. And the little guy, the little investor who's honestly wanting to just have decent retirement and income, or actually wanting to invest in the real economy and keep some of the good firms in business. They're just like being buffeted around. Rag dolls.
Yeah.
Things in this massive sort of turbulence. It's all doesn't fit public purpose, and it's like, I mean, in the future, we'll sort of eradicate a lot of this nonsense when people are sort of wiser and smarter, and the whole of society is basically better educated. But like I don't see this happening in my lifetime. So this is all stuff that we have to grapple with.
This is if I have kind of one like existential anxiety, if that's even a phrase. But if I have that, it really is that like we're getting to a point where, especially with AI, which every single day just amazing new AI tools being created, where we could end up really in a dystopian economy, right? I mean, we could get the neoclassical economic paradigm just baked into society, and with no escape hatch from it. And that's my biggest worry. Is
that'd be interesting. That'd be weird, but that'd only be because the neoclassicals are dominating the training of the AI. But
no. My thought is that my thought is that. Not that the AI makes a determination that we're going to go neoclassical, but my thought is that you're going to have all these different. You're going to have the AI winners, right? I mean, you're going to have the first company that creates fully autonomous vehicles. You're going to have the first company that creates fully autonomous helpers, right? Whatever it is, right? Fully autonomous, whatever, right? Let's just say that there's 100 broad industries that AI will solve that problem. You'll have 100 of those, right? Now,
that's what you mean. Yeah.
No, that's great, right? I mean, that's really good. That means that if AI can just figure this out, then that's really awesome. I got to tell you about the latest Auto GPT. I got to tell you about this. It's a brilliant idea. But you get this solved, right? And production, right? We hit the singularity, right? And there's this potential utopian future in front of us. But we have a neoclassical framework for economic and government policy and economic policy, and that just means that and I'm using this with the capital C the bad capitalists, right? The capitalists just own it, right? I mean, you get 100 kind of oligarchs that own the AIs, and we're all dependent on that, right?
Well, you got to move somewhere else at that stage. I mean, I don't think every government's going to go that way.
Yeah, but where do you? I mean, but they don't. I mean, without them understanding that they are the they have the public monopoly on the currency.
But a lot of neoliberals don't know they're neoliberals. They just sort of follow textbooks, follow the economic experts. And, I don't know. I'm still hopeful that a lot of those neoclassicals are just going to get exposed more and more and more. I mean, I don't know exactly how all that sort of shakes out, but I mean, I just see that MMT is a one-way ratchet. You only get more MMTs.
I agree. I mean, okay, that is.
But I see what you say about. I can understand what you're saying about baked in, but I'm not seeing that dystopia. I see that as maybe like it's still going up. It's like there's still insanity. It's still on the rise a little bit, but I think it's decelerating. I think it's decelerating. So I don't think we're on the way back down from the lunacy. But okay, this is just my totally like heuristic like feel of what society's doing right now. But you got to look at not just the markets and not just the financial sector. You've got to look at all these social sectors, the humanitarian sector, the education sector. You look at all society as a whole. The neoliberal insanity is decelerating. It's not coming down. It's still going up. You can look at the acceleration.
Oh, okay. Yeah, you're right. Okay, that's fair. Uh,
And so the whole AI thing that's a confluence of potential disaster. Firstly, it's never going to be a singularity, right? And that's for metaphysics reasons. Even though
famous
these
last
crazy
words.
people do. Yeah, yeah. I'll bet. You know, they're saying 2040, right? So I'll be around to show them. Anyway, they, it's like if you got to look at the whole social effect, because we don't live in a pure capitalist system, and I don't think we ever will. And the governments are going to just have to be big uh big boys and girls, step up to the plate, and do the proper regulation. Maybe do it sort of like Warren Moses styles. You don't make this kind of leftist sort of neoliberal thing where you've got just regulations up the wazoo, like massive thick books you've developed in the United States with all your statutes. It's a little bit slimmer down here in New Zealand, but we still got our statutes and regulations are still a little bit too thick. So you just need to go the sort of Warren Moses route and sort of start telling entities what they can do.
Yeah, I understand the path forward here. I am in agreement with the path forward here.
Yeah, but I'm just trying to lessen your panic and fear about it all. Sure. I think it's going to get pretty bad. I still think we're going up in the insanity, but it's decelerating. That would be my thesis. I have no evidence to back this up. Of course,
I guess here's my thought. Right, you pour this concrete, right, and every throughout civilization, right? So I'm just thinking over the last, let's just call it 2,000 years, right? There's been civilization steps that occur, right? There's just major technological leaps over time, right? And there's major cultural movements and that sort of thing that happen. And every time you do that, you're laying another level of concrete on this structure that is civilization. And there's so much time for that concrete to dry, and then you're essentially stuck with that. Once that concrete dries, you're stuck with that paradigm until the next major shift happens, right? And I would say the last major shift to happen is the neoliberal shift post World War II, right?
Yeah.
And the concrete dried in the 60s, right? It took about 10 years, 15 years, and the concrete dried, and that was
bad metaphor, though. Bad metaphor.
What's that?
Bad metaphor.
Why?
It's not quite as solid as concrete. It's not like marble. Okay,
it's malleable, but
they basically got rid of it in Chile, and that was not because it got semi-baked in. No one wanted neoliberalism in Chile.
Yeah,
it was just imposed by brute force. So,
okay, for those of us in the West,
that's terribly fragile.
For those of us in the West, though, right? I mean, I guess what I'm saying is, for those of us in the West, and I realize each culture might have its own thing, but right. And you could take this back even to the Industrial Revolution. I mean, right? I mean, at every time there's a point, and maybe I'm wrong about this. Maybe this is where my analogy falls apart, but there is a point where essentially the world order gets baked in, and I don't want to take anything away from the what happened. The neoliberal order.
I agree. It gets baked in a little bit.
Yeah, the neoliberal order that took us from the 60s through, let's just say, the early 2000s, when the cracks really started to show. Yeah. I mean, that was the most prosperous time humanity has ever seen. With all of its faults, a ton of right. So I don't want to say that it was all bad, but there is this point where, to a certain extent, things get baked in, and that's the conflict. That was an accident, right? It wasn't because of neoliberalism that we had amazing prosperity and growth. It was mainly because of technology and just people doing their good things. Yeah,
it wasn't because of neoliberalism. And so if you sort of, it's a false causality to pin it on. Oh yeah, well neoliberalism gave us.
Yeah, and I don't want to say that it is either. That's not what I'm trying to argue. What I'm trying to say is it still was the predominant worldview that took us from post World War II.
No, I agree with that.
Right. And I also don't want to be overly disparaging that the neoliberals got everything wrong. Right. I mean, they were working off the paradigm that they had prior. and they were trying to make a world where World War II didn't happen again. And to at least
that was the project. Yeah.
At this point,
get rid of fascism.
At this
they
point,
didn't realize that they were the ones creating fascism.
Yeah, I mean, at this point, it succeeded, but it's about ready to unsucceed.
Yeah.
So with that being said, I see the current point that we're at right now is a bit of that, and maybe I'm overhyping this current point in time.
Well, I think you're on the way. I think we're decelerating, but I think there will be some AI, craziness going on, and some of the hoarding of the tech and whatever, and a little bit of what Josh would say is AI feudalism. I think there'll be a tendency towards some of that, but I don't think people are going to accept it, man. Just don't. Even hardcore capitalists to their bones, people are going to reject that.
Okay, here's the thing. Let's say we end up seeing this, right, and we end up having 100 capitalists own the means of production, right? Like they're the ones who solve the AI problems first, and they get it, right? They get the ring. The right answer for distributing that wealth, for creating a world that can take advantage of the new prosperity, the right paradigm is the MMT paradigm, that we have this democratic government where everyone has a share of what what the society produces through the arm of the government, right? And then there's also this layer on top that is also still what we would call kind of a private enterprise layer as well. The thing is, MMT understands that, and MMT also understands the monopoly the government has is that is the currency, right? And that is how that is the easiest way that it can get equality.
Currency and the law.
Yeah, the currency and the law. Yeah.
The law and the army and the police and everything.
But
those public
the predominant mainstream view that dominates both left and right completely misses the currency monopoly part, right? So you will get an uprising that says, "What the hell? We have AI bots that can make cars for us now," right? Like, right?
Not completely. I mean, they know about Keynesianism.
Yeah, but okay.
They just freak about the interest rate.
Okay, let's go. Okay, let's just go this way, right? You're going to get these AI bots, right, that can do all sorts of amazing things very, very soon, right? I mean, they're already doing it, right? From lawyers to accountants to whatever, right? I mean, there's going to be a ton of white collar jobs that are just going to be completely revolutionized because of this, right? And so you're going to get as a deflationary, right? And you're going to get both the left and right saying, right, that the right is going to say, nope, government can't print money to make sure that basic human needs are being met. That we've reached capacity where we have the capacity to create the services because we have these AI tools. We're going to create these services, and the way that we're going to allow every citizens to have access to these services that AI can create is by essentially giving them a stipend to get access to it, right? Single payer healthcare, whatever, right? Whatever it is, right? So that would be like the MMT way of pulling it off, right? Or whatever, job guarantee for employment, right? That sort of thing, right?
Yeah.
Neither the left or the right understands that that's even both of them see that is the most toxic route you can go, right? So even if the left wins, and says this is ridiculous, they're gonna impose their will via unions, via essentially regulating and sanctioning private enterprise, which is exactly what we wouldn't want. It would be the exact opposite. It would ensure that progress ceases there, right? It's it's the same thing we talked about last week, that it's a backdoor way for the government to privatize, which from my vantage point does stop does stop the free enterprise project, and then the right, obviously they just would never want
backdoor to privatize, stopping free enterprise. It doesn't sound right to me.
Yeah, if a union, I mean, if you get a company like, I mean, we talked about this a couple weeks ago, a company like GM, right? Fully unionized, too big to fail. It's effectively a government
Yeah,
company,
yeah.
right? I mean, it's effectively
Okay.
a government at this point in the U.S. GM and Ford, for better or worse, are effectively government agents. Um,
Oh yeah, I don't know. They could go away too, but it's like they're not the government. I see what you mean. It's like, yeah, we discussed it, we discussed this, but it's not like they're not forever. And the thing is, you got to realize that human sentiment is a powerful thing, and so all you need to do is open someone's eyes a little bit to MMT, and then boom,
yeah,
you're in.
yeah.
People want to do the right thing, so you only need to show them a little bit how. And I agree with you. If they just steadfastly refuse to learn MMT and just keep listening to Larry Summers and co,
Yeah,
and
that's
it's
my.
not going to
That's
work out too well with the AI stuff. But I
that
don't
is
think
my
people do.
worry, right? They're going to want to tax the businesses. They're going to want to tax the hell out of this stuff. I mean, it's going to stifle the growth. And
But I don't think you can listen to, just as long as Jon Stewart keeps doing his thing.
yeah. Jon Stewart.
Well, you can't listen to
Yeah.
these people for long without realizing they're just completely mad. And they will say some of the right things, how they want social equity and all that. But then all you have to do is scratch it a little bit,
Yeah,
and you realize that they want no such thing.
Yeah.
They just want techno feudalism essentially, and it'll all work out because of the free market. People see through that. I do trust ordinary people. The problem is power.
I don't think
power
people
is not
see.
with
I don't
ordinary.
think. I mean, people see through Larry Summers. Sorry, Ty. I know you're a big Larry Summers fan. But I don't think people see through Larry Summers enough. I don't know.
Maybe not.
And again, I just like guys like Jon Stewart. I mean, I'm glad he went hard on him, and I'm glad he asked some good questions and kind of made him look like a fool. But I mean, I think Jon Stewart would be like, yeah, tax the rich. I don't know. With that being said, that is kind of the angst that I have. That is kind of my worry is that if the AI revolution turns out to be, I mean, I really think some cool things are right around the corner with this AI stuff, and if it really turns out to be one way or another, if we are really at kind of the next turning point, and the next layer is being put down on this super building project called civilization, my concern is that instead of having 10, 15 years for the concrete to dry, that it might dry within a year, right? That it's just going to dry faster than we could have ever seen, right?
Man.
And
I don't think it'll work that way, but I think you've got the right fear or worry about it. But I don't think it can set in like that, because you can rip cables out, and so if governments see it all as a bit of a threat, and they already do even in neoliberal, high priesthood in the EU.
Mm-hmm.
Like I said, they don't really know that they're neoliberals in a sense. They don't know MMT. They haven't been exposed enough. A lot of people at the sort of lower bureaucratic levels, just ordinary people, want to do the right thing. They just have no clue how. And you have to just show them a little bit about how to do the right thing. Mariano Mazzucato does that sort of work. And, in the Zoom rooms, not that I enjoy attending them, but in some of the Zoom rooms, you sort of get this feel that people want to do the right thing. Then they're not going to go all sort of communist and close down private enterprise. No, there's not enough people who want that to happen for it to happen.
Okay.
Plus, they don't have an army. They don't have the means to do that. They can't even get any one person elected who wants to shut down private enterprise. It's just impossible.
It's not that I think private enterprise will get shut down. It's just that I think it'll get so taxed and unionized that they effectively all become GMs. I don't know. What I am glad about is I'm glad that you're an optimist here, and you're helping me out see an optimistic path going forward.
I'll keep a lookout. I'll keep a feeler out if I can. Although I've been on a bit of a news blackout for this declining acceleration in the neoliberal thing. But it's quite complicated because um, I listen to Bill Mitchell sometimes, or I forget where it was exactly, but just recently there was something that made me think, oh yeah, that's accelerationism. But it's not. It's not a societal wide version of acceleration. It's accelerationism in a very small area, and this is. I forget what it was actually, but it might have been AI. I think maybe it was Yanis Varoufakis talking about AI and Chat GPT and all that. But yeah, it probably was actually. But I was thinking, oh yeah, that's accelerationism, but it's just in a small sort of area. It's not. It's not. It's not like the extreme right wingers have got into power, and extreme right wingers in this sense. I don't know what the right word term is for them, but these are people who want to accelerate capitalism so much that it all crashes, and we get into some sort of post capitalist order or something. They're
Mad
right
Max
wingers
stuff or
don't
whatever.
want capitalism.
Yeah.
They want
Yeah.
sort of feudalism or
Yeah.
something like
Yeah.
that. I'm not sure exactly what they want, but they write about it, and you could read up all the stuff. It's quite interesting. But accelerationism is happening because of AI and because of all this tech and all that. And it's sort of passing by a lot of people. It's just happening now. We don't have a control of it. But I don't see how governments are going to just unionize, have sort of mass unionization and all that.
Yeah, maybe not.
There's enough people who resist that,
Yeah.
especially in the United States. So you've got massive libertarian buffers against all that sort of stuff. In New Zealand, you could maybe see people get panicked about the capitalists and the billionaires sort of getting away on us, and start to do sort of mass unionization efforts and all that. But still, there's no support for that really. It's unions in New Zealand traditionally, have always been outside of government, and the Labour Party just has this relationship with the unions here, like in the UK, but it's not like the unions are going to be the ones in government. So that's all sort of partly baked in too. It's like it's just understood in the tradition that unions act on behalf of workers, and they have political parties in power, but the political parties aren't really the unions. There's a bit of a revolving door there, but there's also so many people that are just QAnoners and libertarians and right wingers, and you just can't get rid of them. I mean, there will be no Stalinist type purges. I mean, that would just completely backfire. Completely, I would say. And so, that's all interesting history, that purges and all that happened, and Mao, Cultural Revolution, Stalin, purge, and all that sort of thing. But
I guess what I'm thinking is that it's less of a revolution and more just that the massive bureaucracy just kind of takes hold, and part of that massive bureaucracy is just kind of not unions per se, but just over regulation. Hopefully it doesn't turn out that way. I mean, hopefully MMT takes
eating though, right?
Hopefully
you
MMT
have to enforce the regulation.
No, we have it. I mean, we have it. But we have it right now. I mean, we have every left candidate for president right now, or that would run if they were a leftist candidate that ran in 2020. I mean, everything was about, when it came to kind of economic equality, everything was about taxing the rich, right?
Yeah.
Taxing the rich destroys everything for everybody, right? Like that is not the path to prosperity for the people.
It's rhetoric, though. They're not going to be able to do it. So.
Yeah, but that's what I'm saying though, is eventually they're going to say, my worry is eventually there will be enough of like hey, there's so much production, there's so much output happening here, right? Like there are all these amazing tools that got created overnight, and instead of being able to enjoy more of my life, I'm now even more of a slave to the things that I don't have.
Yeah.
right?
Right.
Because it
Yeah,
got
that could
because it got baked in, right? It's kind
It
of
could
a
happen to certain people. Yeah.
um,
I mean, it's not going to happen to me
well, it's not going to
because
happen to me. I mean, yeah, I
I
mean,
don't want to.
I'm
I don't want to do that. So I'm not
look
going
at
to do
me.
it.
I'm super smart. I'm good looking. I've got every opportunity in front of me.
I'll just go back to being a peasant.
Yeah.
Prefer
All
that
right,
to being a slave to the.
we've had
Yeah.
enough existential dread
Yeah.
for
But
now.
it's really something it's right. It's in the Zeitgeist, right? So it's good to chat about this stuff.
Um, yeah, I wish Warren had won
So
that. Yeah, that Senate seat in 2010 too. Yeah, that would have been kind of crazy. TED Talk about scientists replacing politicians with AI avatars. That'd be kind of wild.
yeah, man.
Whoops. Hold on.
Don't even mention the idea. Oh god.
Well, some of these politicians, man, are
Some of them seem like it already, right? Yeah.
God. Like whatever, Feinstein hasn't showed up to Washington in 6 months or something like that.
Yeah.
Let's talk some economic data though. I'm gonna change gears. We're
Economic
gonna talk some
data,
economic
macro
data.
data.
Yeah, this is kind of
Seems
interesting,
like
right? A couple weeks
Okay.
ago, maybe a month or so ago, I pulled up some research that I'd done where for the last 11 weeks in a row, non-farm payrolls had exceeded the consensus. I've got this the stuff pulled up in front here, and I'm realizing, hold on one second, this is going to mess things up for just a second, everybody. But Bijou's going to disappear, but bear with me, I'll be right back. There we go.
No,
I pulled up, I did some research where I showed that going all the way back to 2007, so the consensus versus the actual. So what was the consensus is the survey of non-farm payrolls had exceeded for 11 months in a row what the non-farm payrolls actually came in. So employment beat expectations for 11 months in a row, the longest streak ever that we had the data for. Yeah.
Really?
Yeah.
We have the data.
Yeah, we have the
Going
data
back
for
what, the 70s?
No, 2007 for consensus. These polls only started since 2007 that I had data going to. So, so finally that streak was broke. We broke the streak for at least non-farm payrolls. Unemployment was better than expected, but the long story short here, we're finally seeing maybe a bit of a cool off in just this ultra hot economy that we've been seeing. Still very hot economy, but non-farm payrolls came in a little lower than expected, but still, like, this is still an economy that is just on fire, and no one gets it. I mean, we've beaten this horse to death, but
you get it.
No one is figuring this out. And I love following Mosler on Twitter because he'll point this out, and it's very succinct and to the point to people who are posting this stuff. The bewildered posts. And no one connects the dots. I mean, despite despite his generosity.
Well, even the others, like even Bill and Randy will be saying, yes, but there's a lot of sectors, lower income groups and all that have been crushed, and so they're just waiting for the bad stuff to kick in for all that rate hikes. So I mean, and Warren knows that too, right? So he what Warren said when he was on your live stream with us, he said, he just doesn't know where it ends.
Yeah,
but that the implication is it does have to end.
So, we did talk about where it was going to end. This is actually good. We can bring up the next thing that I want to talk about, which is we did talk about where it could end, and I'm starting to think this was my proposal months ago. Even before we talked to Warren, but I still think this was probably the right call. And I think where it ends is I think we're starting to see a major move here in oil. My thesis going back months, maybe even to the end of last year, is that what will likely happen is we will see oil really start to take off because we're going to, my guess is that there was kind of a quid pro quo between Saudis and Biden where we were getting this big push of inflation finishing off last year, 2022. Biden was like, keep oil prices down. We'll cease any sanctions or tax or whatever, not a tax, but like any sanctions or we'll cease pressure on the Khashoggi thing. It's a win-win for everybody.
Right.
You like those support and resistance lines, Ty? And my thought was, okay, there is an anticipation that we're going to hit a recession in early 2023, and that won't come to fruition, and in fact we'll end up having a much stronger economy than expected. And then eventually the Saudis are going to be like, wait a second, we could have been pricing oil at $100 a barrel and not crashing the economy. And yet now you guys are at record low unemployment. You're adding hundreds of thousands of jobs every month. What the hell? We want ours, right? And I've thought the big price gouge was gonna start to happen. In fact, I even think I gotta find this tweet. I actually think I tweeted out that it would start happening in June.
Okay.
So I think it came in a little early. But with that being said, we are seeing oil really start to take off, and I actually have some data that supports this. Just so you know,
that long line from the recent low, I can't quite see the date on that. What's the date there?
The low kicked in at the end of March 17th, and
March 17th.
The move up. So we went from $65 a barrel to about $84 a barrel in a month. Interestingly, my target, using just Fibonacci ratios here for specific moves, my target was $66 a barrel, and that's been my target for a very long time, and we hit it and reversed. So I think the economy can likely support oil greater than $150 a barrel for quite some time, probably closer to $200 a barrel.
You're trying to distract my attention with all your Fibonacci moves, man. I have to look that up now.
Yeah. Every good trader has their own tea leaf magical magical system that probably isn't fully anchored in science, but by God, it works.
You got me interested though.
Yeah.
Okay. I mean, there are definitely certain mechanisms behind Fibonacci sequences. So, yeah. Damn it.
Maybe
I'll have to look into that.
My thesis, and Ty will appreciate this.
Numerology or not?
Yeah, exactly. Yeah. You see, I noticed Mars was going in the opposite direction than it was just the other night, so I figured.
Anyway, So interesting thesis, man. That's good. That's interesting.
Now, to be data driven, though, one of the things I can put up here. Go ahead and make your point, and I'll pull up what I'm about to explain.
No point.
Oh, that's
I used to have a passing interest in all the chaology and stuff surrounding markets, fractal analysis, and all that. But
trying to think, I'm gonna push the right buttons here. Come on.
Never really got deep into that. But now that you mentioned Fibonacci.
So I'm gonna pull up and I'll explain this.
Okay.
Once I pull this up, I use. Everyone has their own what they just call technical analysis, right? Their own technical tools, a way to kind of look at the chart, make sense of the, to make sense of the patterns that are playing out. Now, the reason I think that you can actually there's something in the patterns worth learning is I do think what we see as price patterns are really just the expression of the individual agents in the market, essentially expressing their preferences through this kind of evolutionary discovery game of what the price should be, and that those patterns are, like you said, fractal. They're repeatable and they're predictable. And
it's individuals, but within a group psychology.
Yes, yeah. And so there's some repeatability and some predictability in those patterns that emerges. This guy named R.N. Elliott created this kind of process, this idea called Elliott wave, what he called it. And essentially, the whole idea, it really actually Minsky kind of follows very similarly some of the same concepts, where any price pattern that starts, right? You get some low point in price, and then you get a bump up higher in price, right? And he would call that a wave one. That's when like the real insiders know that something's brewing here, right? Whether it be oil or whatever, right? We might be in a wave one in oil right now. And then eventually you'll get a fall off, a pullback in the price of oil, and that'll be wave two. And that's all the fears that pushed the initial push lower in oil begin to resurface, right? Demand's low. We're going to hit a recession. That's why oil is going to fall off, and you get this brief pause in price, but it'll never break the prior low. And then eventually the full realization will begin that oil is going to take off higher, right? The new paradigm emerges, and this is wave three, and this is when the big trend emerges, right? Both in time and price, the big trend emerges, and in this case, oil is going to take off, and it's going to start pushing higher, and this would be a wave, Elliott would call a wave three move. Then there's a wave four move where you get this short pause in price, and the idea of the short pause in price is now the insiders have made a ton of money, right? They bought at the bottom, they know a top is forming, they sell at the top of this of the wave three, and this creates this wave four where price consolidates for a while, and this is where the dumb money gets in. They're like, oh my God, oil's up 100% over the last 6 months. I got to get in on this. And that's when the dumb money floods in, and that's when you get the big blow off top. They take price even higher, but it's very short-lived. And you finally get your blow off top, and then you rinse and repeat. And this idea is that cycle repeats over and over again. So that's Elliott wave.
Yeah,
that's what all those annotations are.
I haven't studied that a lot. I mean, I just came across it when I came across your work.
Yeah,
but it sounds really interesting because it's based on you telling a sort of group psychology sort of narrative, which seems to make some sense. So it's like the dumb money, they can't help themselves.
Yeah, exactly. Yeah, exactly.
Exactly. It's like,
yeah.
So even if they knew about the Elliott wave, they'd still do it. Yeah,
exactly. They'd still have to. Yeah. So anyway, going back to oil though, one of the models, one of the tools that I use, and this was actually built by a guy named Art Berman. I think that's the last name. Comparative inventory, and what the comparative inventory is, it takes the inventory at Cushing, Oklahoma. In other words, actually, the underlying premise of this is that it's really not demand that drives the long-term trend in oil. What actually drives the long-term trend in the price of oil is the supply side. So it's looking at the supply side, it's a supply side model. So what it does, it takes the supply at Cushing, Oklahoma, averages the past 5 years of that supply, and then takes the current price, subtracts the current supply, the current stock of oil at Cushing, subtracts it from that 5-year moving average, and that gets you comparative inventory. So essentially it's showing you comparatively where the inventory, the oil stocks are at in Cushing, Oklahoma. And as you can see, it's pretty darn strong.
When I was looking at the EIA data, is that Cushing? Oh, I got to check with you what
it is. The link I gave you is Cushing. Yeah, it comes.
Okay,
this is coming from the Cushing, Oklahoma. Yeah,
Cushing, because I didn't come across Cushing.
Yeah, I'm pretty sure it's just the oil and petroleum stocks at Cushing.
Yeah.
Either way, you can see a pretty good negative correlation here, right? Low supply.
You mean it's all in one place? In one place?
Well, for the U.S., that's the largest. Yeah, that's going to be the largest.
Right.
Largest hub.
Okay, got it. Sorry.
No. Those are good questions. Yeah. Negative correlation. Pretty much low inventory. You're going to have a scenario where higher prices can play out. Higher inventory, going to be a dampening effect on price. We've had historically low inventories, right? Falling off from a year prior. And we've really been, in my eyes, we've really been underpriced for quite some time in oil to begin with. And I think that not only are we going to, and we're already seeing this happen over the last month, we're getting a very quick snapback for this underpricing. But not only that, I think we're going to start to get very overpriced. And I think the point I would be making is this comparative inventory model will fully support a higher price here, right? It's not like we'd be pushing higher into a dynamic that just isn't going to support the higher price. We'd be pushing higher into a higher price that would support it, right? That would encourage a higher price. So I really think, and my concern, I made this point during one of my recent Patreon updates, is that my concern is this can potentially even happen faster than I think I initially thought. I was really thinking this would be a 2024 dynamic that we'd see the seeds planted during the summer of 2023, and then by 2024 it would fully come to fruition. But I'm starting to wonder if maybe by the end of 2023, essentially that we'd have a replay of what we saw from through 2007 into mid 2008, something like that, maybe even faster. It's kind of my concern right now, and I think that is the end game, because at some point oil gets high enough where it does become a tax on the economy, right? I mean, there's no amount of fiscal flows. I mean, there is obviously, but there's no amount of fiscal flows that realistically will come to save the day, even if interest rates get high enough. It will just be too late for that income channel to offset effectively the tax. That will be imposed when oil starts to when it finally hits
around 2007. There, hang on, what's the cause? Hang on, so the inventory is blue; it's going down. The price is going up.
Yeah,
and then so you're saying that then the price goes down. That peak, that looks like we're past the peak at the present, right?
Right here.
But it's like extremely amplified. So I'm just naively looking at that pattern.
Yeah,
it goes down and then it goes back up again, like spring.
Yeah.
Boom,
so
boom.
I wouldn't. Okay, my argument would be in 2008 that the push higher in oil, when we got up to $140 a barrel, that the push higher was part of many pricks to the bubble, but a very important piece of kind of pricking the bubble that we had at that point, right? And again, it could have been diverted, right? I mean, the great financial crisis could have been averted.
Just I can't see the dates. Is that before that peak
in oil
price? Is that before the crisis?
That was right as the crisis was. I mean, shit hit the fan in October of 2008.
Yeah,
stuff was getting very, very bad. Stuff was getting very dire starting in the summer of 2008. Markets topped, I think, in October of 2007, but really started their downward acceleration about halfway through in 2000. Yeah, about halfway through in 2008. So things were really starting to spill in the S&P mid 2008. But the financial crisis itself took place really September, October of 2008, and by March of 2009 we had bottomed. But
and the inventory didn't drop too badly there, right?
I mean, relatively speaking, it supported the push higher. Yeah. I guess my argument really is that you could really make the case that we could see the price gouging that we saw back in 2008, and in this case, we do have the higher rates. We have that income channel that can support a higher oil price. Eventually,
we also had transport shocks too, though. Does that play into the inventories? I mean, I don't know.
It does. Yeah. I mean, I'm sure that's part of it. Yeah, I'm sure it does. Like what Hamel is bringing up, I'm sure some of the stuff that the government's been doing with SPR that will affect some of this as a whole. I mean, we'll see how this plays out in terms of how accurate this will be. The bigger point is that I guess the bigger question is, do the oil producers feel that they can get away with price gouging? Right. And if they feel like they can get away with it and run it up, then we can get a reinforced cycle where price just pushes higher, like we saw in 2007, 2008, right? Where price pushes higher, there's at least at the outset, there's initial demand for that higher price because we have a better than expected economy, and then we can just kind
would they need to convince themselves that the economy is not just better than expected, but is sort of there's a reason for that.
Yeah, well, okay. So I mean, this was part of our.
Would they have to understand a little bit of MMT to do that? Because, or could they possibly be thinking, oh, we better not, because obviously the Fed and various elements in the United States politics actually want to cause a recession.
So it's kind of
we better not do it.
So I asked
tricky for me. I don't know how they think.
I asked Warren this question. I mean, I did. I asked him.
Oh,
yeah. Because I mean, it's kind of part of the thought process I had. Because it's like, like, is there anyone who's making the determination at OPEC or, you know, particularly the Saudis? Is there anyone who's making those decisions that would know that if oil gets high enough, it would cause a recession? Do they, and would they just not care? Right? Like, right. Like, would it be like, okay, we caused a recession.
Yeah.
I don't care.
Right.
In the meantime, we made $4 trillion. Right?
Yeah.
Or is it, no, I know I'm killing the golden goose. So, or the goose that lays the golden egg. So I'd rather not kill it. And you know,
just bash it around.
Yeah, exactly. Yeah. Just kind of abuse it and make sure it can give me all the golden eggs that it can.
Yeah.
But we also know how dynamics play out, where even if in this kind of there's kind of a quasi monopoly price setter of oil, where it can still get away from them, right? I mean that price, the price setting monopoly could still get away from them to the upside, which is what I think we saw in 2008. So I don't want to say this is an absolute, this will absolutely play out, but my kind of end game thesis right now is that we see oil push higher over the next year. And if oil gets sufficiently high enough, let's just say 150 plus a barrel, maybe 200 a barrel, that's enough to put necessary pressure. And eventually, especially if it accelerates fast enough, it will accelerate past the level at which the new flows from the higher interest rates can kind of support that higher price level. That would be the end game. I mean, that would be where it ends. That would be.
Man, talk about you're relying on nuanced thinking from price.
That's my thesis. Those are kind of some of the things that I'm keeping an eye on going forward. So,
yeah, keep an eye on that.
Anyway, oil pushing higher. That's my thought.
It is interesting.
Yeah, Josh. That's kind of my thought.
When they're a monopolist,
they
don't know the dynamics. They don't know what exactly what price to set. They'll set it and see what happens, and take the money and run. And,
Yes. Let's see. So the data that came out today,
the health of the U.S. economy. They're going to do the right thing.
Yeah. They really care about the U.S. consumer. The next thing that I want to hit on is CPI came out today, and it was lower than expected. So we finally had a little bit of lower than expected data coming out, which from a market standpoint, when I say market, I just mean effectively S&P, right? I do think there is a desire for the market to see the Fed take their foot off the gas on the rate hikes. And we're starting to see indications in the data that some of the overhedging that really took place during 2022 is starting to give way. And I think a lot of that overhedging was concern from the rate hikes. One, and half of that is misplaced. The other half isn't, because higher rates reprice assets lower from a discounted cash flow standpoint. So once that gives way, right, once we can say we have kind of a stable rate hike cycle, a stable rate environment, right, where it's no longer accelerating, then I think at that point, at least the worry over constantly having to devalue asset prices can give way, and I think that can allow markets to finally kind of reprice to the upside. So to me, in the weird world that is, in the Bass-Ackwards world that is that is finance, I read this as at least a potential plus. Now markets ultimately sold off to close the day about 0.5%, so we'll see how we finish off the week, but that's kind of where CPI came in. But what's interesting is go ahead. Yep,
it's almost like they just don't care about unemployment. It's like, whatever. Will you just stop the rate hikes, will you?
Yeah.
It's like, not because of any employment, NIRA or anything effects. They don't care about that. It's just like, this is not cool. Okay, cut it off. Wall Street's just going to tell the Fed, okay, we are the market. We say stop the rate hikes. Next Fed FOMC meeting, they're going to stop the rate hikes. Is that possibility?
Did they stop the rate hikes?
Yeah, I'm just
Yeah,
speculating here.
yeah, yeah.
Yeah, because the market just says, yeah, that's enough. Yeah, don't worry about unemployment. Unemployment's schmunemployment. We don't need to bring yeah, we don't need to bring on a whole lot of unemployed people. Nor do we have to generate a whole lot of employment. All right, they're just like it's just like they've had enough, right?
Ty brought up, and you just asked, what's the probability of the rate hike next time around? So we're 20 days, 16 hours, 50 minutes, 22 seconds away from finding out the answer. Right now, we are at 30% probability of no rate hike and a 70% of a 25 basis point pop. So we'll find out. We'll get to find out. It does sound like this will be the last of the year, though. But who knows? I don't know. It's all that. Look, yeah. Talking about being discouraged, some of that stuff gets discouraging. But
yeah,
because they've got it all backwards. I mean, it just doesn't matter. They've got it all backwards. It's
you gotta wonder if the thinking on the Nauru is that they actually don't really believe it, and it's just all rhetoric at the political level, like sort of a cover, and they're really only focused on inflation, not unemployment, and it's just a story they tell themselves about the Nauru that they're bringing on, stopping this crazy increase in employment. I mean, obviously in fairly bad jobs, bullshit jobs, I guess, but it's not really. That's just a story, I think, at this stage, and they're just focusing single-minded on inflation or CPI, and just got it backwards.
Which, quite ironically, I think is about to bite them in the ass, or they're going to have a really tough time going forward. Because if my hypothesis is right, we're going to see oil take off, and that's gonna
exactly.
And it's going to absolutely pop inflation.
What's that going to do?
Speaking of CPI, what's really wild is when you start to break down the components of CPI. I mean, the real reason CPI fell more than expected is energy. The energy component of CPI has just absolutely collapsed. You can see my screen, but here's each part. But what's kind of fun is when you look at some of the other items, like when you look at apparel, actually up over the last few months. When you look at education and communication, up over the last few months to begin the year. When you look at new vehicles, up past few, I should probably start turning some of these off. New vehicles up last month or two in terms of rate of change. When you look at medical care and services, that's falling off too. Okay, but we do have
these charts you're showing just the raw percentage.
Yeah,
the rate of change is a little uptick at the end of it.
Yeah, for things like new vehicles. So my point is, on the consumer side of things, I think we're starting to fully see the price level being
the inflation.
I'm sorry,
interest rate.
Yeah. The term structure of the price is now fully starting to be priced in.
There's a bit of a settling there. Yeah.
So we're starting. I guess what I'm trying to say is we're fully starting to see the full effects of kind of the second boom, if you will, of the rate hikes now pushing the price level higher. And again, you take a victory lap and say, great, we're seeing inflation finally starting to come down more than expected. That's good. But when you look into the details, it's coming down more than expected because energy has taken a huge hit. But we're starting to see the consumer good part of inflation really start to take off. And once oil catches up, then inflation's going to be the inflation is going to be off to the races again, and
off to the races again.
I think I tweeted something like that out. I got to find this tweet because I think I'm going to be right when it's all said and done. That's going to how it's going to be, and I think I made that tweet almost 4 months ago now.
Oh well, bring it out again. Show the. Yeah, that'll be a good story to have. I'm glad you got that out early and made it public. That's pretty brave and gutsy of you. But
final kind of headline, and then we can get into then we can change gears. We'll do an early third hour. if you want. But the final headline is the Fed does expect the banking crisis to cause a recession in the coming year. I don't think they know what they're talking about, but nevertheless, the Fed sees a recession on the horizon.
Bank sees creditworthy customer. Bank doesn't give them a loan. What?
Yeah.
I don't know.
Yeah. So this is actually kind of one of the things too. So some of the data that I track is the bank flow data, right? And this has actually been kind of interesting because Warren's been hitting on this, and it's something that I've always, and I'm glad he is, because it's one of those things that I think I've kind of always understood, but there's no textbook for this. I mean, right? There's no ChatGPT doesn't know this, but and I've seen this in the data, and some of the data we've even looked over it too. We've seen we've seen situations where all of a sudden you get a flip in bank data that doesn't exactly make sense, and it gets kind of it almost propels kind of the equity space higher. So we've seen deposits take a huge hit over the last few months. A lot of people have been pointing out deposits have taken a big hit. But what Warren pointed out, and same thing with bank credit, you've seen bank credit take a huge hit over the last few weeks. But Warren pointed out is that banks, what we track in the H.8, they are allowed to and able to sell off some of their assets to the financial system. And his point is, if assets are being sold, the deposits are going to come down at the same rate, right? And a potential outcome of that is that it's just making more capacity on the balance sheets for banks to then expand their balance sheet again, right? And to me, this fits in exactly with what kind of a Minsky understanding would be, in the fact that you see these credit cycles, right? These kind of boom and bust credit cycles, right? Where it's the risk is to the upside, where the credit cycle expands too fast, and it's the upside where you've got to be, most concerned about the sudden collapse. But to the downside, all of a sudden, when they have balance sheet capacity again, they can start to kind of reaccelerate the credit cycle to expand once again. But with that being said, we have seen a precipitous drop in bank credit. And I mean, I will say, if a crisis like the debt ceiling crisis were to creep up on us and really start to wreak havoc, the problem is we are already in a position of weakness, right? So I mean, that's kind of the concern. There's already kind of a brittleness to the credit structure, and if you end up seeing essentially a blockage because of the debt ceiling situation, then I don't think all of a sudden the
creditworthy borrowers dry up.
Exactly. Yep. So there's no capacity to kind of restart the cycle. So
unless you get into the whole sort of fraudulent lending again,
which it could, I don't know. I'll be looking to
enough buffers against that.
Quadruple the size of my home if that takes place. Sure, nothing bad can happen. So that's kind of the headlines. That's where we're at. Some of the data that I wanted to look at, and I think
man, that's interesting. Right, good rundown. So this thing you say, there's no textbook on this. Damn, it's like that like tickles me, and I was itching to sort of like get you and Warren together, and like I know he hates sort of writing, big things, and that's not his thing. But someone should be like, I don't know, being the scribe for all this stuff, doing something in the back. I don't have the time, but man, would I want to do that?
Well, I mean, in very short order, we'll have text to or speech to text that can also actually like formulate.
Hey,
right? Like it's not just going to be dictation where it's just copying what I say, right?
But a lot of the drive in that is the fun of writing it.
No,
like you get academic.
No,
you get academics who hate writing the textbook. Like Susskind or someone. They're great researchers and they're great minds, and they just like writing little papers. They're massive. They're incredibly dense theories and research papers. So like, take me a while to read just a few 15-pager or whatever. But they put them out almost like freaking blogs. It's insane how productive some of these academics are, the really bright ones and the ones that have genuinely good ideas. I just don't like writing textbooks. But me, I kind of like the whole pleasure of writing. I don't want the AI to take that away. Oh god, it's like you're causing a little panic in me.
I hate writing.
I like crafting a good sentence. But yeah, I don't know. I guess it'd be useful to have AI to write a few of the boring sections, right? Okay. No, I think I'm with you, Douglas. So here's the thing: I get the AI to write a whole lot of the boring shit, but then you see, I've got material. I've got raw wood and lumber that I can craft into something beautiful. Sound right? And if the AI gets to the point where it's actually writing beautiful textbooks, well, then I go and play golf. But show me a Bourbaki textbook that's beautiful to read. They don't exist.
Yeah.
Number of beautiful mathematics textbooks or theoretical physics textbooks that are really pleasurable to read is like I've got a couple of them in my library. That's probably all there is on the planet, right?
You found the four. Yeah.
So yeah, no, maybe this MMT textbook venture might be something that AI could be really good to help with.
Yeah,
certainly get a whole lot of the bulk sort of done in some way, and then I can check with you and Warren and do something that's really awesome and fun to read.
Real quick, Ian, can you tell me what Buffett's recent investments are? Because that's the piece I don't have. I pulled up what the BIJ does, but I don't know what Buffett is up to. Let me know that, and then I'll try and piece together some thoughts. Going back though to the textbook, the real thing that I'm looking for in a textbook is there are textbooks that can explain how the process works. Right.
Mm-hmm.
What there's no textbook about is explaining the process, but also explaining the implications through an MMT lens. Right. Like our buddy, Perry Merlin, really good on explaining the process. Right. He's got a lot of insights on the process, but I don't trust his instincts on the implication of
implications. Yeah, and maybe what the correct policy adjustments are.
Exactly.
And all that.
Exactly. Yeah. And that's like the difficulty that I have sometimes is when I try and piece it all together from a macro perspective, and then how it would kind of touch markets, how it would begin to kind of touch society and the economy, the Main Street economy as a whole. Those can be the difficult parts to understand. And, just kind of connect all those pieces. And I'm not going to write the textbook.
No, but you could train the AI to do. It's just it's a good little project that I reckon. Jeez.
Okay. Bank of Japan says bank stable, rules out any major policy shift, 0% interest rate. And so apparently the Warren Buffett's doing some investment. Is he buying currency or is he actually just investing in I'm not seeing Buffett come up. Yeah.
Ian, get your typing fingers going, man.
I'll switch screens and Google it in just a second. I mean, I'm glad they're sticking to a 0% rate. It makes sense. It's working. They have relatively low inflation because of it, relative to the rest of the world. But I don't know what their what their fiscal side looks like.
I mean, but apparently, just going off what Bill Mitchell says is that they do have a little bit of a different understanding, and it's like it's not wrong to say that they're a little different culturally, because this has been the whole thing. Why the Widowmaker trade, people sort of explain it away. It's like, but if the bank, if they weren't Japanese, our bets on them having to
yeah.
raise rates would have worked,
Yeah,
but
yeah.
that's just cultural. We didn't understand their culture, blah blah
Yeah,
blah.
yeah.
But there's a little bit grain of truth in that, because from what I heard from the stuff that Bill Mitchell was doing in Japan, that they do care about their people.
Yeah.
Like, they do have this thing about seeing unemployment. They hate it. They hate unemployment.
Yeah.
They're not like you guys in the States or the Fed, or even in New Zealand. They don't want unemployment to be driving up and to bring down inflation. That's the key difference, I think, because they're still not really MMTs. They just hate unemployment. It's a cultural thing over there. So they're going to bring down inflation some other way. And they seem to have, by accident, stumbled upon low interest rates initially because they wanted to generate inflation, because their economy was sort of a little bit of stagnation right after the 90s. So they wanted to improve the economy, get GDP up a bit, and they keep struggling to do it. And I think lowering the rates is the way to do it. And they've sort of stumbled upon, I think, over 30 years or whatever, into realizing that actually, the lower rates are not all that bad. And I just think they're not, like you said, fiscal. It's not clear that they're doing fiscal quite right. But it really helps that they hate unemployment.
To GDP. Yeah, yeah.
They got that bit right.
Confounded by the opportunity to buy into 5 Japanese trading houses 2 years ago. I was confounded by the fact that we could buy into these companies. Okay, so he just doing a bottom-up valuation then, saying they're good. Okay.
They're good. So what was he investing? What was he investing in? Did you say?
The firms are Mitsui. Oh no. Well, I'm gonna stop trying to pronounce Japanese words, but maybe he's that. I am not a bottom-up trader. I've almost never touched individual companies. I've shorted individual companies in the past, but had some good timing on like ARC before when that was all blowing up. But I'm not at this point. If I had my way, I would have to be, because I'd get rid of passive investing. But for the time being, so that seems to be that. Give me 1 second, Bijou. I need to.
Was that a negative sign on the interest rate there?
Yeah, I think they're
negative 0.1%.
Yeah.
So it's a slight tax.
Tax on, yeah. And I'm not for that, but God, ads these days. That's wild. Why would you get rid of passive investing? I don't think it is actually what
you get rid of passive investing by increasing the old age retirement pension. Right?
Let me put it this way, Charles. Go ahead. Yeah. Go ahead.
Yeah, no, we've got to stop this craziness of people just having to invest for no other reason than nest eggs, retirement, and all that.
Yes,
we're going to get rid of the whole idea of people needing a home in order to have sort of a nest egg. It's like that's not the functional purpose of housing.
Yep.
Jeez, I mean.
Yeah, Charles, it's not that
it just brutally punishes the poor who never are going to be able to afford a house.
It's not that I would want to get rid of passive investing per se, right? I wouldn't want to make a regulation that says that you should get rid of passive investing, but passive investing is effectively subsidized. No, I'm not a Bitcoiner. No. But my point is that passive investing is effectively subsidized, right? Because there's a massive tax benefit to put money in a 401k. And it doesn't benefit capitalism, right? I mean, it's not me blindly buying the S&P 500 doesn't benefit society through the benefit of having free enterprise. Let me start this way. The benefit of having free enterprise, the benefit of having a private market where you can buy into companies and potentially profit off of them profiting, right? The benefit of that is the innovation that comes, right? I mean, it's the creative, it's both the creating the new products, but it's also the destruction of companies that are just a waste on resources, right? So those so those people can go and do other things with their lives that are actually wanted, right? I mean, that's the magic of free enterprise. Passive investing doesn't benefit that process, and it also doesn't serve a public purpose, right? So the 401k system or the whatever, I'm just going to use 401k for any deferred, any tax deferred sort of savings for the sake of this conversation. But any setup like that, right? The public purpose that's trying to be served there is so at retirement you can have a nest egg, right? But there are other ways to get a nest egg, right? So there's this public purpose of a nest egg that creates this cottage industry of passive investing. And I think if I'm reading what Josh is saying, it's a leakage on the economy too, right? It lowers spending on real. Yeah, exactly. You're taking demand today and pushing it until tomorrow, which I know if you're kind of a libertarian or right winger, you're thinking, oh no, this is what you want. But no, I mean, you want you want to be maximizing both output and the ability to consume that output, assuming you've adjusted for kind of the ecological and damage that can be done for such a system. So. So passive investing, I don't see serves a purpose. I don't mind if you're going to be a passive investor. That's fine. That's your prerogative. I just think we should stop subsidizing that market, right? We should effectively get rid of the 401k system and go to a system that if we're going to serve the public purpose with some system. Now, again, just so everyone hears me here, I am taking off my Doug trying to understand where the markets are heading hat and now putting on the Doug, what is actually best for society, right? What's best for society is getting rid of the 401k system. And I'm fine with a small, I mean, taxes are just bad in the first, so yeah. What's the alternative? Yeah, so the alternative would be that if you do want to invest money, that you invest money with someone who's actively investing that money for you, right? Where you're actually encouraging companies to take the money that's given to them to actually invest in new products and new services that are going to benefit, right? That you're having the world where you're getting true creativity coming out, new products being offered, and then also where companies that need to go to the wayside are able to go to the wayside, and the market does that, right? It functions that way. That would be the alternative.
Yeah, that's well said. And let's not privilege the investing class. I mean, hell, what really drives commerce and industry is sales. It's not the investors.
That's a really good point. Yeah, that's a really good point. Yeah.
I mean, come
that's
on.
A really good point.
Let's get real about it.
Yeah.
Okay, so we're totally anti-Bitcoin. Bitcoin is a hoarding of of whatever you call it currency. I mean, it's priced in US dollars or whatever it is. So it's hoarding that. It's not circulating it. There's no good that comes from that. It's like it's completely parasitic on the real economy, which is driven by sales. So you spend, you're actually good for the economy. You save, you're bad for the economy.
Yeah.
In the macro, this is not saying that the individual saver is a bad person. They're not, right? They're looking after themselves. They're maybe being responsible, blah blah blah. But it's in the macro. You got to have sales. You don't want Bitcoin. You don't want all of this passive investing that is subsidized, that is just subsidizing savers, when you could always offer people a decent pension. And the way you have decent pensions, like I'm talking about really comfortable retirement for everyone, is you have a good real economy. So you need sales. You need to drive firms with sales, not with investing. The investors have their place and all that. Yeah, sure. But majority of income for a firm should really come from sales.
Amen.
Because then you're actually selling. They're creating something useful.
Yeah. I mean, and that's right. I mean, that's really what we want out of our God, I mean, it is so unfortunate too that
That's what we
like I mean,
want.
we talk about this financial world, right? But we don't want a robust. I'm sorry, we don't want a massive financial sector. What we want,
Exactly.
what we want, is a massive output sector
That's right.
for consumption.
And the more and the better that gets. The investing for that should be on the energy efficiency side of
Yeah,
things. So you want to develop
yeah.
that sort of
Good question
technology,
though.
which
I mean,
is
good.
not it's not an easy thing to sell, but that's where investors and governments, but being the main investor, has to come in, so we get a lot of output that people need at low energy costs.
Charles, good question. We also talked earlier when this first came up. I don't think you were here at that point. But one of the problems with passive investing too is it kind of, not kind of, I mean, it just does undermine the signal that is being given to the marketplace by the price itself, right? The signal that any price of any, whether it be commodity, any price of a company, right, any price of any asset, that signal is supposed to be a signal to the market, kind of describing the demand of whatever that is, what the value of that is, and that signal gets diminished in its functionality to the free market when you get something like passive investing. And eventually
Yeah.
it can create a situation where fragility can come out of that lack of the signal properly being a signal to the actual underlying event that it's signaling. And a handful of people have kind of noticed this, built up models, and have shown that eventually when you get to some sort of saturation of passive investing, you can actually get price to become meaningless and get some crazy kind of fluctuations in price, and we might be getting close to that point. So passive investing, I think, passive investing that is effectively subsidized, I think, creates some systemic risks that aren't fully understood, and we probably won't fully understand them until a crisis happens because of it.
Yeah, think of it as a bit of a I don't know, like a oh, I'm trying to think of a good metaphor now. I was thinking of something like fire, but I don't think I've got it quite figured out. You think about it just indiscriminately, chucking in some feed on a farm paddock or something. You want to feed your cows, so you chuck in some feed, but you're actually feeding some dragons, whatever. You're feeding some monsters. The monsters grow, the cows don't. What's your control of that? So much better to have the market, quote unquote, the market, or people who have money. Really give them the incentive, give them the opportunity, and take away the passive investing opportunities if you can. But buy incentives, have them support products they like.
Yeah.
And again, I say that sales. So I mean, I guess I'd agree. Maybe there's a role for some passive investing. Maybe you don't want to just outlaw it, but you, I just love Warren's plan of like stock
Yeah,
stock market regulation. Just make it simple, very clean,
put it on
very neat solution.
volume as opposed to price. So Charles brings up a good point, and I want to make sure I'm not being, at least I'm fully articulating the thought here. I'm fine with passive investing as long as it's not subsidized. I agree that if you decide that you want to invest money in the stock market, that finding an active manager that's going to outperform the market by picking winners and losers is a difficult task. Where just because of the way distributions work out, the majority will not outperform, right? I understand that, and I'm not saying that on a personal level you shouldn't do passive investing. 95% of all the wealth I've ever generated investing has come from taking advantage of passive investing, right? So I only effectively passive invest. I mean, I actively invest, but I actively invest via passive investing on steroids, right? So, Charles, I agree. Passive investing is, in the current environment, the best way to go. Yeah, okay, Charles, I'll explain that in just a second. But it shouldn't be if you're going to incentivize people to invest, you should incentivize that investment to be for the to increase productive output, right? I understand that you can get active funds in your 401k as well, and that is certainly a possibility. But you would be, if it wasn't for the tax advantage, there would be a heck of a lot less money necessarily heading into investment vehicles to begin with, right? And if there was no incentive to passive invest, right? I mean, if you had to have capital to deploy to invest it, versus putting it anywhere else, right? Whether that's actually maybe just consuming with that or whatnot, I would imagine there is a world where it's a lot less likely that passive investing becomes as pervasive as it is. My hunch, well, that you're not the tax advantage, Charles, is that you don't get taxed on it when you put it in the 401k until you pull it out, right? It's I mean, you're deferring the tax, right? I mean, granted, you could make the argument that maybe 20, 30 years from now when you retire, the taxes will be higher, but I don't think that'll end up being the case. So again, I just want to be clear. I don't think passive investing, given the current situation, is a bad way to go. It's actually what I recommend anyone do that doesn't want to become an active investor. Just get your match in your 401k, passive invest, S&P, broad market, perfect. Get it done. Do that. Don't active invest. But what I'm trying to say is that system in and of itself is not a system that benefits capitalism or the public purpose. Anyway, I'll digress.
Yeah. Well, no, I think I appreciate you saying that and responding to Charles. I mean, Charles, good question, and I think Douglas, great response. You always got to look at the societal benefits and advantages and costs to a lot of this financial activity, and certainly, as you say, in the current environment, passive investing can be good for people who have money, but it's not going to help wider society in the macro. So it's an individualistic sort of libertarian type of activity that you don't have to outlaw, but I'm always thinking you got to look at the societal wide benefits and not just not just yourself. And I don't know. I mean, I agree with everything you said there, but I think there are ways to have, to allow people to invest, more ethically, and I think that's what's got to be looked at. The whole ethics of the industry just completely lacking, as far as I can tell. And I think active managers underperform because of the structure of the system, right? They're almost, they're at a disadvantage in a sense, right? It's not like
I don't know if it's the system. I mean, I just think they underperform because it's impossible to know where the market's going.
It's impossible to know. Yeah. Well, I mean, that's part of the system, right?
Yeah.
They're underperforming relative to others who are not doing active.
Doing active. Yeah.
So not everyone can be Warren Buffett.
Charles, you bring up a good point. In terms of what would people do with money? I mean, above all else, again, just to hit home this specific point, we would want people to spend that money, right? I mean, a hot currency is better for the economy. A hot currency drives unemployment lower. That's what we would want. In terms of those who would have money who would want to invest, the hope would be that they are incentivized to invest in new production capacity as opposed to just indexing. And again, I'm not like I really hope I'm not coming off as like indexing serves no function at all. Again, it is what I recommend and what I do myself, or at least take advantage of. What I'm saying is indexing, especially to the extent that we have it, doesn't benefit the free market. Investment drives no. It's the other way around.
It's the other way around. You got that backwards,
You got that
Charles.
backwards, man.
Jeez, mate.
Yeah.
Come on.
If
You got an MMT show here. Don't embarrass yourself.
well, I don't think he's an
I mean,
MMTer.
go. Oh, you're
No,
not
no, no, no.
MMT. Yeah, okay.
Yeah.
Yeah, investment savings are the accounting records of past investments. And, just think about it for a second.
Yeah, we would. I mean, I understand that there are major economic schools of thought that would think otherwise, and that's fine. But once you,
well, it's not really fine.
well, okay.
What sort of school of thought? It's just an ideology.
What's there to invest if no one spends? I mean, what came first, the chicken or the egg? In a barter system, then yeah, I mean, I would say you need to save before you can, right? I mean, you would need to invest before you can, you can spend. But we live in a monetary system, so because of that fact,
someone has to spend more than their income if there's anyone who's going to be able to save. And under normal times, that's the government. So when the government invests, it can always spend more than its income. It doesn't get the money from anywhere else. So it's a pure fiscal injection. That's the driver, right? And the reason people take the government's currency when the government spends is because of the coercive tax liabilities. So that's the way the system works. You can argue for some other system on Mars or wherever you want to live, but this is the way it works in the present day. So that's what we're dealing with. Saving is the accounting record of past investment. Like spending drives the real economy. All the predatory activity that you get from the financial sector, that's all from investing and all that. It's not creating any real goods. So
yes,
it's mostly sales that drive the economy. You need people to spend, and like I said before, not against the individual having savings desires. For one thing, they're not putting pressure on prices, so that's okay. I don't mind if people don't spend, but in the macro, you want a currency to be a bit hot. You want a currency to inflate a little bit continuously over time, not hyperinflate, like not the inflation rate keeps increasing, but just the base, stable, roughly fixed but moderate inflation rate, so that people incentivized to spend. That creates sales, that gives profits to firms, that they're able to innovate or disrupt or whatever, and that's how the system seems to work. It works well.
Charles, I hate to point you to another resource, but I would recommend two people in particular. Probably Randall Ray would be a good one. For kind of understanding how, kind of like because I
money manager.
Yeah, because I get, so particularly if you're coming from like an Austrian standpoint, right? You're going to look at it from what do they call it, like the Robinson Crusoe, like man on an island, right? And, unless you start, but one person gets a bunch of. Gathers a bunch of shells. One person gets a bunch of fish. Another person gets a bunch of sticks, and then you get this barter system that gets created, and then that barter system turns into a monetary system once they find out you can use shells for exchange, right? And so the thought is unless you invest first in catching a bunch of fish, you can never get an economy off the ground. So the investment has to happen, but. The anthropologic record and I would say, I think the logic in that from someone like Randall Ray would show you that that's not how monetary systems come about, and it's not the way to look at a monetary system. It requires, the spending has to come first to allow the investment to take place. So check out Randall Ray, and then also check out David Graeber as well for kind of understanding the anthropologic standpoint from kind of a historical perspective. What the historical record shows that it really is always a debt-driven system. Anyway, those are my thoughts.
Yeah, well, firms want to expand. Okay, maybe Charles, maybe he's thinking more in terms of real terms. So yeah, if you want to create anything, you have to invest in real terms. You have to invest in capital, right? Machinery, labor. You have to hire people. You have to get resources. So in that sense, in a sense, investment comes first before production, right? That's just completely, it's just logic. It's just physics, right? You can't make anything without the machinery. So in that sense, the Austrians and everyone, they've got the story right there. What they're confusing is the role of money being credit being debt. So always someone spends more than their income, and it begins with government. So if you want to come on an MMT show and talk about this stuff, you have to understand the currency. The state currencies are a simple public monopoly, and that's the beginning of the analysis. If you think, currency gets created by, banks, and then the government starts using that, and then the government starts putting their own signatures on the bank's currency, it's just nonsense, right?
Yeah, and Charles, to answer your last question there, what do I mean by a monetary system? I'm just distinguishing a system of money. That a system of money is different than a system of barter. That a barter system where that a barter system where like God, Ty, you just come in. Yeah, I love it, man.
Yeah, Ty's point is there that if you think about what it backs the US dollar, it's a tax. So the US dollar is a tax credit.
Yeah,
that's the beginning of the analysis from MMT perspective. Now, it doesn't have to be that way, right? We could live on a Robinson Crusoe island. It could all be the way Adam Smith described, but it's not.
And it never has been. It has been. But the point is, a monetary system is a system of money. It's a system of debt first and foremost, right? That's where the money system or the money story begins. Whereas a barter system is something different, right? A barter system can exist. I'm not saying it can't, and it does exist, but usually it exists in a place without government, without laws, right? I mean, usually barter systems exist, but you would
when governments break down.
Yeah, when governments break down, barter systems exist, but you would never call whatever the medium of exchange turns out to be money, because by definition, money takes place in a monetary system. And a monetary system, by definition, is a system that first and foremost starts the process with the government spending, right? Creating that tax credit.
Yeah. I mean, in theory, they could start by setting up licensed banks that issue credit, but that would be a pretty awkward way to kickstart things. Usually they start with some sort of army or whatever they've inherited from whatever existed previously, whatever currency that's now defunct. And then they say, here is the new currency, and, we're going to tax you in it. And does anyone want some of this stuff?
Yeah.
Well, okay, I've got some stuff for you to do. You could join the police, the army, whatever, public services, and we'll give you some of the stuff, and then you get to pay off your taxes. That's how it works.
Yeah, Charles, I'm not.
You could put.
Yeah, go ahead.
Oh no, I mean, I'm just saying. You could. No, I think I've said enough.
Charles, what I'm trying to say is, there's no way. Austrians, I mean, both Austrians and neoclassicals both think that the monetary system we have is the evolution of the barter system. Right, that money as a medium of exchange came about first because of a barter system that then was built upon, or that effectively evolved or grew into a monetary system. What I'm trying to say is that's not how it can't happen that way. A monetary system always has to come about first through the issuance of debt, first through the issuance of an IOU. Right.
But the point is, it's not just debt, right? You got to read Mitchell Innes on this, and Randy Ray, not just any old MMT, or don't read Graeber, right? It's not the first 5,000 years of debt. It should be the book. Graeber's book should be is it the first 5,000 years of credit and debt. Every debt is a credit.
Yeah.
So it doesn't start with debt. It starts with credit. That credit is debt. So if I'm in credit to Douglas, Douglas is in debt to me. This is just like, it's almost metaphysical. This is just how we define things. This is how the accounting works.
Yep.
That's what a monetary system is. It's a system of tax credits if it's a state currency. If it's some other system that's not based on a state government, like some sort of commune or whatever, it's the same thing, right? Someone's got credits. That is a claim on someone else. It's someone else's resources, and whoever, the credit is only money if someone is going to redeem it, and the redeemer is, in debt to the creditor. So you got to think of credit and debt as the two sides of the same coin. If you're thinking MMT, and this is the history of debt. It's the history of credit and debt. Read Alfred Mitchell Innes.
So Charles, I don't. There's no such thing as money, debt. There's no such thing as money that isn't debt based. It is always debt and credit. Like there's no
always debt and credit based.
There's no system that exists. I mean, I'm sure you could come up with a system, right? But I don't.
It wouldn't be called money.
It would be called money. Yeah, it would be called Bitcoin. I mean, whatever, right?
Yeah.
I mean, you call it whatever.
Bitcoin's a good example.
Yeah.
No one promises to redeem a Bitcoin for anything. So it's not a credit debt system. It's not money.
Money can be equity based if there is a system. I'll have to look into that.
Yeah, I don't think you could define money as something equity based, right? So if you have this whatever equity you're counting as equity, you have money. If you don't, then you don't. How do you what are the accounting records then? What are the claims on resources? How do you sell anything in that system? I think that just amounts to just barter, if you ask me. It's not money. So maybe MMTs are a little bit too pedantic on this. I don't know, but I think it's correct. I think it's a correct thing to define your terms well and carefully. And I'm pretty sure a lot of economists just attack MMT. They don't use the MMT definition. and it's just, I guess that's just something we're sort of dealing with.
Yeah.
But money is a word. You can define it however you want. Maybe I shouldn't care too much, but because MMT is the probably the predominant school of thought, even though it's tiny, that dominant school of thought is based on the monetary system being a public monopoly. I think we get to define what money is, and other people, if they want to engage with us in our analysis, the framework, they have to think that way. Now, if you want to create some sort of other system, I think it's fair enough that MMT is now, even if you think MMT is crazy, I think it's fair enough to say MMT is established enough now that if you're going to talk about any other kind of system of economic production and distribution and not use credit or debt, I don't think you should call it money.
Yeah.
Just to be fair, just to play the proper game with, just be a nice player. Call it something else. Just call it something else. That would be my plea.
No, and to answer the next question, so you guys think hard money standard is barter? No, I think. I'm assuming when you say hard money, I'm assuming you mean like a backed currency. I don't think it's necessary barter. I mean, it can be implemented in a barter fashion, but I would probably put that more under just bad monetary policy.
Bad monetary policy. You're pegging your currency to
assuming
a commodity.
Why
do you do that? We know what happens there. It doesn't work out.
Self-inflicted monetary.
if you have a government prepared to pirate whatever backs the currency for you, and redistribute, you talk about massive government there, like way big government that I never want.
Yes, exactly. Yeah, the amount of government necessary for pegging.
Once you lose out of whatever once you lose supply of whatever it is you're backing your currency with, and you've got to lose that supply if you're an honest government. Right? You're eventually going to run out. So unless your population is declining, unless you're shrinking all the time, constantly, then you can tolerate the deflation. But if you've got a growing population, it's not a good way to work. It never works.
Let's see. How about this,
You're
Charles?
scanning the questions.
Next, yeah. We should probably get wrapping things up here soon. I know I've got some work to get done myself, but we can definitely go into how does hard money not work out next week. That could be,
okay.
That could be something we could start up next
topic.
week. Yeah. The longest surviving civilization in history was on a hard money standard. What civilization was that?
I'm not sure what you're talking about there.
You have to give me the answer. The other thing too, this one's for Ty. When you were talking about Canada, quite to my disappointment, the YouTube chat doesn't have the flag emoji, so I couldn't give you a good Canada flag. So that's unfortunate.
Huh.
Yeah. Eastern Roman Empire. All right, I'll do some fact checking and see what the monetary system was on the Eastern Roman.
Pretty sure
Empire.
they use the tax-driven currency. If you look it up, it's what you peg to, right? You can peg to gold and all that, but I'm pretty sure they were pirating, so they were using fairly draconian taxes, and it was still a tax-based system. Right? People, you've got a hard money or a hard currency, right? Well, but most people don't have whatever it is that backs the currency. They're relying on some authority that has the stuff. And if that's actually truly what backs your currency, people have to be able to claim it. If you don't promise to redeem in your whatever it is, gold or whatever, people will lose trust in that system. And it just becomes totally draconian or authoritarian in that case. So you have to give away what you promised to redeem if it's going to be backed by any hard commodity. And sure, those systems exist for a while, and you can certainly make it last 1,000 years if you've got a big enough army to plunder. Pretty sure that's what the Roman Empire was doing. Do periodic debt. What are they doing? Debt jubilees, perhaps too. I'm not sure.
Yeah, could be. All right, I've got a bookmark. We'll see if I can muster up the
Ty
the energy. Yeah,
that's the flag the Canadians would use if they were using gold. That's their currency.
Oh, let's see. We're back, which was good after a brief hiatus.
Yeah. Did a bit of the fun half in the first half. But, I didn't. I had maybe I didn't have too many other topics for the fun half today. Been a bit boring the last few weeks in the MMT space for me.
Oh yeah.
Okay. I did. We did have some of those tweets. I did go on a bit.
I do have enough time. Hold on. There was a guy Murphy. Charles. Ty mentioned it way up above in the chat. Someone mentioned it, maybe not Ty.
I did a couple of replies, one to Bob Murphy and then one to the Richard Murphy, the
Richard Murphy,
UK tax guy.
Richard Murphy. Okay.
Richard Murphy. Yeah.
Richard Murphy. I saw it come up. I saw some back and forth. I didn't follow it at all. It didn't interest me. Sorry. But can you give me the TLDR and kind of summarize?
Maybe I could. I don't know. Oh, okay. So I guess I'm a Johnny come lately on some of this. Sometimes I just jump in and leave.
What kicked it all off? Was there a Twitter thread that kicked it all off?
Terrible thing to do. Terrible habit.
Does someone have the link to the Twitter thread that kicked it all off?
Yeah, I don't know. I guess I could find it.
I mean, I can give you
the short rundown.
Yeah, give me that. Yeah.
The bit that I saw that when I jumped in is he said, "Oh, it's hilarious how I get trolled by MMTers who think I don't, understand whatever." And he says he gives 2 links to 2 of his papers, and he says, what in here is wrong in my understanding of MMT. So he just hung that out there. So I think a few people maybe responded, but I had a read of the papers, and you know, he agrees. He's MMT adjacent, right? He agrees that sort of taxes drive the currency and all that, but he's very strong on using taxes for what would you call it? Social justice. So he's more on the side of like tax the rich because they've got too much money, but also then we can redistribute.
Okay.
You see that kind of thinking, right? It's like, why would we not, run social services anyway, regardless of how much tax we get off the rich? So he doesn't quite have that awareness. So anyway, there's a few things that you can find in his writing where I think he does mischaracterize MMT, right? So he's criticizing MMTs for not being aware enough of what you can use tax policy for social justice, and and criticizing MMTs for not being fully aware. And I just had to reply. I said, mate, MMT, recognizes that taxes drive the currency. There is no other school of economic thought that understands this critical role of taxes. So, to criticize MMT for not being aware of the role of taxes seems like a bit rich. And there's a couple of other things. But yeah, like you, I'm not too interested. Now, I promised him that I would read his papers in more depth and blog, and then give him the link to it if I had something interesting to say. But haven't gotten around to that. But it's interesting. It's interesting because he does engage with MMTs, right? And I think Warren has talked to him, and Patricia Pino, and Christian Riley, maybe and he's been a guest speaker at MMT conferences. So I wouldn't say he's got a bad dude, but sometimes he just he's like a friend that's a bit annoying. So you want to try to engage with him in good faith and have a good argument, and maybe see if he can you can have a sort of rapprochement, right? He's not an anti-MMT. Anyway,
defending Mosler. It does make it look like a cult. Yeah, well, it is in that regard. A cult.
Who needs to defend someone who's right?
Yeah.
You just got to be fair to Warren. He doesn't get everything right. Whatever, you can dig into his politics on Ukraine, Russia, whatever, but I agree. If you start having a cult of personality, then it is a cult of personality, but that's not what MMT is. But if someone says something good, accurate, right, good analysis, I'm going to defend them. Sorry, why wouldn't I?
Which he's right 10 times out of 10. So,
well, yeah. Enough of the times. But I find that I don't need to defend Warren. All I'm doing is like agreeing with it. I'm not defending him in any way. He doesn't need any defense.
Yeah.
And there's plenty of MMT. There's plenty of disagreement within the MMT. Just look at Steve Grumbine and Bill Mitchell and them, and they have a entirely different take on what we should do with our understanding. Yeah. Not entirely different take. I mean, it agrees in terms of they agree on fundamentals. And I think even, Steve Keen now has finally come around to basically agreeing on fundamentals. And so even if you look at the issues about trade and, current account balance and all that sort of thing, if Steve Keen was using floating exchange rates properly, he'd be agreeing on the fundamentals of Warren. And I've sort of talked to both of them about that, about this disagreement that, Steve doesn't agree with Warren's sort of rhetoric that exports are a real cost and imports are a real benefit. But then Steve's a little bit weaselly because he always leaves out the real when he wants to criticize MMT on trade.
Kind of in the one discussion,
always drops the word real.
Yeah.
And he makes it look as though MMT is crazy because they say exports are a cost, imports are a benefit. If you drop the word real out of that, I think you're being a bit weaselly. Just my opinion. Anyway, Anyway, these chaps, they
Shots
don't need
fired.
they don't
Shots
need
fired.
defending them. I'm just a
Yeah,
dumb physicist. So, geez,
yeah.
I mean, yeah, I belong to a cult, so yeah, whatever. As long as it's good, as long as it's correct
Yeah.
and good and doing good for the world, it's fine. I'm in the cult of physics as well. I'm a Suskinista. I really do believe wormholes exist at the Planck scale. So, but there's maybe the wormhole discussion is for another day too, because it's getting a bit late.
I'm hitting the wall.
Anything else you got to want to bring up, or any other questions
Uh,
that we can deal with quick, or just say goodbye and
yeah,
wait,
I think we're good.
see you back next week.
We will be back next week. Hopefully, I got to pull up. Yeah, let's see. Next week we will be back next week. We will be back next week, the week after. I'm taking off for vacation. First week of May, so
nice.
we'll see. We might do a vacation live stream. We'll see if we can get that together. But that'd be kind of fun.
No, I'll not distress you if you want to do it for fun. Yeah.
Yeah, no, it'd be fun. Maybe like an hour of me just walking around, live streaming. We could figure it out. But yeah, another. Can I ask a quick last question? There's a bunch of headlines about commercial real estate crisis come in. Any opinion?
Oh yeah, there's a guy Dan Williams who contacted us on Twitter. Not sure if you picked him up, but I picked him up and
real quick, Pancho. I know what you were talking about, man. I know what you were talking about. Yeah.
Okay.
No worries. Commercial real estate though.
No worries. Yeah, he was on commercial real estate. He actually had some ideas. I wasn't able to get into it in any detail with him, but he had some ideas on patterns in real estate markets. So I don't know if Dan's listening in, but that's something that I said I'd maybe be interested in getting back to him on about. Although it's not with Doug Bot project and all that specifically, but it could be another useful way to use some of the TensorFlow stuff and neural networks to have a look at that, because he's not doing a lot of the mathematical analysis on neural networks, and he thought that we might be able to help him out with that. But yeah, I don't know. Commercial real estate crisis.
Is there a ETF?
This is
I'm trying to find out if there is specifically a commercial real estate ETF or something like that. I'd be curious to see. Let's see if there's anything that exists. If there's any investment vehicles.
Maybe bookmark that as well if it's getting a bit late for you.
Well,
Sounds like an interesting topic.
Moderately intrigued now. I see.
Okay.
ICF is a potential. SLG is a good REIT. Okay. SLG. Wow, SLG's been in rough shape. Okay. What's the thesis? What's the thesis on? Maybe I'll just have to look into this myself. But what's the thesis? Is the thesis that everyone's working from home, commercial real estate, and that's now just kind of a done deal. Commercial real estate is so abundant that the valuation of these properties is going to come down. Maybe a fire sale once this fully sets in. Is that kind of what the thesis is, or what? I don't. I guess I'd have to look into it. God, I don't know what SLG is. SL Green Realty Corp, but that's an ugly chart. I can switch over to that.
Oh yeah.
That's been beat.
Oh yeah. Death. What? Heck, jeez. What is that?
Oh, the debt. Okay, the debt. Okay. Yeah, maybe. Yeah, I'm not terribly up on commercial real estate. I'll say this in terms of what risk any given sector poses to the broader economy, right? Because I know the concern, the thought is this 2008, right? And the one thing I'll say about 2008 and the financial crisis we had at that point is it could have been averted had there just simply been just a couple more $100 a month on average income for effectively the middle class, right?
Right.
Um,
Yeah.
and the point I'm making is at this point, what I would call kind of the income channel, it's flowing, right? Like we're seeing those
Right.
flows hit. So we haven't seen an extended period of time. We saw a very short period of time where we were running a net surplus, in real terms, at least from the government sector. But that's not being an extended time period, and it's fully reversed. Now the debt ceiling issue is the big caveat on all of this. It could quickly reverse. I mean, it could quickly send everything into a complete spiral. But with that being said, as long as those income flows remain kind of stable and growing over time, I don't see any given. I mean, let's just say there are some commercial real estate that are way over indebted. I could see it blow up, but it would be isolated, right? I mean, it'd be isolated and it wouldn't be a kind of a contagion sort of event. But if we get into a scenario where the fiscal spigot gets turned off, then something like that can become an instigator for a larger crisis to the financial sector as a whole.
I really don't know much about this at all. But when you say commercial real estate and debt, there is it these the builders who are the big construction firms or something.
Well, I doubt
like
it would
that?
be construction firms. I bet it would be more
Is it people who
portfolios
hold
of portfolios. Yeah.
And they're in debt, so they're wanting
Yeah.
to
Yeah.
buy, sell, and I'll
Well,
sell it.
no, I mean they're massively in debt. They have had their my guess is they're massive. This is my guess. They're massively in debt, right? They've borrowed all this money on 0% interest rates. They're massively in debt. They bought up all this commercial real estate. The commercial real estate prices are going down. Interest rates are going up. It's hard for them to service the debt. So it'd be my guess is the quandary they found themselves in.
Right. Which is an interesting sort of way to say what a crisis is. Down here, we think the crisis is the prices are going up too fast.
Well, for commercial real estate, that's the one thing that I don't think is being priced higher.
Right.
Yeah, I'll have to look into it. And see if there's any merit. Yeah. Drop me a DM on Twitter if there's a link, particularly that you want me to read or something like that, and I can give you my thoughts. Anyway, good final question. Good final question.
Yeah, interesting.
Yeah.
What ramifications could that
have? Anyway, I'm glad we made it back. Glad we made it back after 1 week. And no, it's not your fault. Yeah. No, I mean I could have done a live stream. I could have done it, but so nice to take a break. But we're back at it, and we'll get back. We'll be back at it for the foreseeable future. So I think that's it for me, man. If you want to give an outro, if you got something ready, we can definitely go that route. But
I didn't really have anything ready.
Yeah, okay.
I don't have anything really that suits the theme.
For tonight.
I don't know. No, yeah, because I prefer to think of one that fits the theme. Probably don't have anyone. I could do a little poem, something like I guess this is it. So a little poem would be: Congress doth control the Fed, where it trickle up would not be dead. That's it.
I like it.
Little Spike Milligan there.
I like
Congress, alas, Congress, alas, neolibs, is due to this we hear their fibs.
Right on. Great week. Everyone, thanks for stopping by. Thanks for saying hi. Thanks for watching. And we'll see you all. We'll see you all next week.
Next week.
Take care, everybody.
Take care. Good evening, guys.